loads of issues, as we talked about yesterday, whether it's government legislation, whether it's IFC, a whole bunch of stuff that is growing and needs to be resolved and sort of brought to fruition. But basically, compared to almost everywhere else, certainly in Asia, in ASEAN, and pretty well globally if you're looking at GDP growth, Vietnam is where it's at, okay? So that's the overall view. We are bullish Vietnam. But then you have to invest, and all our investors, have to try and outperform the market and outperform other markets and all the rest of it. So it gets a lot more complicated. So this is every 6 months we produce a book because we're the only ones in the market that can, and we talk about how the market's doing and how we see it and the issues at this time. So in a nutshell, it's buy on dips. It's take opportunities to get some great Vietnamese companies into your portfolio. And looking forward to the next few years. But in terms of what we're going to be talking about now, people are going to talk you through their current views in the book and then some ideas about what to buy.
So just to sum up our thoughts on the VN Index, we are having the 12 months VN Index target of 2,055 points based on the bottom-up approach. This is the first time ever that Vietnam is having a target price of 2,000 based on fundamentals. Second, we think that the EPS growth for 2026 will be 26%, but if we were to look at the consensus, it's about 20 to 22%. But if you were to exclude, the outliers, which is, the energy sector that is doing extremely well recently, then you see that our number is actually quite conservative at less than 20% growth for FY27.
For our expectations, so we expect that Vietnam GDP growth is still very strong this year at 7.6% and inflation at 4.7%. The reason why we see that it's still strong because firstly the manufacturing activity is still stronger than our expectation, and secondly is the stronger recovery of the consumer demand than our expect. That have to offset the drag down coming from the net negative contribution from net export.
So moving to banks, our key message for the banking sector is mind the funding gap as liquidity headwinds persist. So the operating environment has clearly become more constrained due to tighter liquidity. This tightness is visible across several key measures. First, you can see that the system loan-to-deposit ratio, LDR, already climbed to 115% by the end of April.
In longer term, we think that the story for consumption in Vietnam remain intact with the supportive of higher income per capita, the rising of middle class and urbanization. In addition, another key driver for consumption in Vietnam is the strong expansion of modern trade and e-commerce retail. And in the past 5 years, we see that the MT channel grew sharply at double digit, and we expect the trend will continue in coming years, and with a quite low penetration rate of MT at only nearly 30% for the overall retail sector and only 14% for the grocery sector. We see ample room for growth of this in future.
Since the new leadership took office, we've seen the government to significantly shift the stance toward a more pro-growth approach from previously anti-corruption and tightening approval. It's quite evident because the government has issued a series of legal documents aiming at untie the legal knots, accelerate the approval, resolve all the projects that stuck with investigation.
So, to summarize, our topic are Hoa Phát, the HSC, Jumanet, BB Chance, and FPT. And our most favorite stocks are Hoa Phát and FPT. For Hoa Phát, it has strong earnings growth, stable companies, and very cheap valuation. For FPT, the recent price is attractive and reflected the risk from AI, and it offers an opportunity in the coming time.
After the war in Iran with the US, I think that energy security has been put on the center stage for many Asian countries and including Vietnam. So just to recap, before the war, it looked like just a normal Strait of Hormuz, but right after the war, it became the tone of Hormuz. So it looked kind of difficult to navigate the situation. It looked kind of funny. People ask who's winning. So I think that in terms of oil and gas, the US is actually the winning side here. The evidence is they're exporting more crude oil, they're exporting more natural gas, and last but not least, they are exporting even the shale oil technology to other countries such as Argentina, which means that they're expanding their influence on the oil and gas market, and they are trying to reduce the impact of OPEC countries